Greetings, my name is Alfred, and today we're going to talk about financial management, organizational financial management. And the focus this time round will just be an overview. We'll just do a financial management overview for organizations, not personal, just organizations. So like I said, the focus is just going to be an overview this time round. And in dealing with the overview, we'll seek to answer 4 key questions. What is organizational financial management? What is organizational financial management? And then we'll talk about why is financial management important? And then we'll talk about who is responsible for financial management in an organization. And finally, we'll talk about how we achieve effective financial management. Okay, what is financial management? Why is it important? Who is responsible? And how do we achieve effective financial management? Okay, so we'll start off with the first bit. What is organizational financial management? So financial management in an organization is about planning, organizing, monitoring, controlling financial resources to be able to achieve the objectives of an organization. It's planning, it's organizing, it's monitoring, it's controlling financial resources of an organization to be able to achieve the objectives of the organization. If you like, this is a generic management definition. One could say human resource management is also planning, organizing, monitoring, controlling human resources to achieve organizational objectives. Logistical management could be planning, organizing, monitoring, controlling logistics to achieve organizational objectives. So there are many definitions out there for financial management, but I like this because it will dig us well into the areas we want to look at for now. So planning really is about looking ahead. It's about budgeting. It's about forecasting. It's about what does the future look like financially. That's planning, financial planning. Financial organizing is about just an English word as you hear it, organizing, recording well our transactions, so that if we need them in future, if we need to make a decision on the basis of our transactions, we can find it somewhere readily available. Some people record in books, some people record using software, some people record in different places, but how do we organize our transactions? How do we file them well? Monitoring, again, another English word we're picking from here. You've planned at the beginning of the year, this is what we want to do. You've carried out, you've implemented, and as you're doing that, you were organizing your transactions. Then monitoring is just checking back. How are we doing in line with our plan? How are we performing in line with our plan? So that we course correct. If we are going off, we correct the course. That's your monitoring. And then if you like internal controls, or controlling is about the internal controls. Controlling the policies we put in place just to make sure we are safeguarded, our assets are safeguarded. When we put a lock on the door, that is safeguarding. When you put a password to access to a particular lock, that is safeguarding. Those are internal controls. So planning, organizing, monitoring, and controlling financial resources to achieve organizational objectives. And we should look a little bit into each of these. Then we look at why. Why is financial management important? Why should we be bothered even about coming up with a good financial management framework or system? And one of the main reasons why we should have good financial management is to help us to achieve our objectives. I mean, we've talked about financial planning, budgeting. Imagine you're not budgeting and you just spend money. As it comes, you spend it. As an organization, will you be able to pay for your priorities? Will you be able to prioritize well? No. Will you then achieve your objectives? No. You pay for everything and you forget to pay salaries. You didn't plan for them. You want to achieve your objectives. Your staff are going to strike. So just to be able to achieve our objectives, we need to have good financial management. Confidence and trust. Confidence and trust. Now, it doesn't matter whether you're an NGO or you're a business or you're in government. When you have good financial management, you produce a certain sense of confidence to stakeholders around you. If it's a business, staff will need to know that the finance manager is planning for them. Otherwise, if you're not, then they have no confidence in the organization. If it's donors, they want to know that you have good financial management systems in place so they can trust you and be able to give you money. If it's an investor in a business, they want to know you have good financial management practices. They will not lose their money. So confidence and trust in different stakeholders. Even in a family, children want to know that daddy or mommy is planning well. They want to know that tomorrow there is school fees. They want to know that you're doing that. So confidence, and trust. Thirdly, to be accountable. Accountability. If someone has given you resources, you need to account back on how you have used those resources. That's good financial management when you're reporting back. But you have to have organized your transactions well to be able to report back. A donor has given you money. You've got to organize your transactions well and report back. An investor has put their money in the business. You've got to be able to account back to them at the AGM. How did you use their money? Audit is part of accountability, for instance. Talk about continuity and security. I don't have to say so much about that. Those of us who had planned and had some resources on us before COVID happened possibly went through this moment a bit better. Those of us who had not planned, had no reserves, possibly we had more challenges going through these moments. So continuity, both short-term continuity in terms of how you plan your cash flows, but even longer-term continuity. You're looking at how are we going to finance ourselves in the next couple of months, couple of years. So I like to summarize that as SCCA. Why is it important? SCCA. Some people SCCAs, they study SCCA, so I like just to use that as a reminder. Achieve objectives, confidence and trust, continuity and security, and to be accountable. And thirdly, we'll look at who is responsible for financial management in the organization. Who is responsible for financial management in the organization? Let's give it a minute to think about it. Who do you think is? A guard? Receptionist? MD? Finance manager? Who do you think? If you said all, thumbs up. Correct. If you think it's just a role of the finance manager, no. Everyone has a role to play in financial management in the organization. Ultimately, by law, in most jurisdictions, the board or the governing body, the governing council, ultimately take financial management responsibility of the organization. So they've got to set policies, they've got to ensure there is audit, they've got to ensure that you have the right policies in place that guide the organization to achieve the overall objectives of the organization. And then that board will delegate day-to-day authority to managers to implement the policies they came up with. So the financial policies, this is how we manage our money, this is how we spend our money. It is implemented by management. Okay? The delegated authority is to management, day to day, to oversee financial management. All staff, everyone in the organization has a role to play. In anyone who handles money or anyone who handles something that's bought using money has a role to play in financial management. If someone is at the reception, they have a role to play with respect to financial management. If someone is at the gate, the guard, they have a role to play. Let's talk about a guard. A guard might be given responsibility to ensure that whoever is taking out certain items has got to have a leave form or something like that that allows them to take out property. Now, you need that guard to implement that policy, because if they don't, then people can start walking out with laptops, walking out with chairs, walking out with your furniture. But if the guard is carrying out their financial management role, which is internal controls, which is, hey, check before anything comes out, then they're carrying out their financial management role. You see, everyone has a role. Think about yourself. Think about what you do in the organization, and you begin to see that you have a role. Maybe you account back for the money that you've used. How do you account back? You have a role to play. And finally, we'll talk about how do we achieve effective financial management. How do we achieve effective financial management? So I'm going to share what we call a face of effective financial management. It's just a face model. I hope that will help you remember how you achieve effective financial management. The face of effective financial management. Let's begin with the eyes. Okay? The eyes, budgeting, planning, looking ahead. Okay? It's the eyes that look ahead. So when you're budgeting, you're trying to look ahead. Remember, we said financial management is planning, organizing, monitoring, and controlling resources. So the planning aspect is the budgeting and forecasting. If you budget well for your organization, then you will have good financial management as one of the key components. 2 is accounting. Some call that record keeping, some call that bookkeeping. If you're doing your accounting well, that is a good component to help you achieve effective financial management. How do you record your transactions? How do you file them? All those, right from writing in a book, like I said, all the way to using the best of accounting software out there. How do you record your transactions? There's someone who once brought me a cavera full of receipts, polythene bag full of receipts, and said, help me, just help me sort me out. So I had to begin from, getting receipt books for them, getting payment vouchers for them, getting invoices for them. And we took them all the way to an audit. That was accounting work for them. Reporting. Reporting, the mouth is the one that reports. Hope you remember that. That's part of monitoring. Reporting allows us to monitor how we're spending. Okay? Do you have budget, for instance, against actual reports? Reports that show you this is what we budgeted, this is what we spent, or this is what we budgeted to bring in, and this is what came in. That comparative, that's a report. Or how did we spend on these particular areas based on what we have planned? That is reporting. So to have good financial management, you should be reporting. Even as an individual, if I have a budget on how I want to spend, I need to record how I actually spent, that's accounting. Then I need to compare what's happening. That's looking at my report, so that I can course correct if I'm going off. And finally, I guess, the nose, sniffing. Is everything going well? That's internal controls. That's where your auditors come in to check, do we have the right systems in place? Are we implementing them? Your internal auditors, your external auditors are checking that. Management is checking around to see what is happening. Those are internal controls. Okay. Do you put cash at the counter that whoever comes and will find it at the counter? No, we keep it somewhere in a safe, locked up. Those are internal controls. Okay. Do we have one person in procurement that is buying, that is receiving the items, that is writing the check, that is signing the check, that is, you might be signing for air. That is, again, internal controls. I'm not going in detail at this point. I'm just giving an overview for us to appreciate some of this. I can't be able to go through the details a bit later. So if you like, these 4 are the core components of good financial management. Planning, which is budgeting. Organizing, which is accounting. Reporting, which is monitoring. And controlling, which is the internal controls. But there are bits that are also very important in good financial management. The enabling environment, your governance, your tone that you set. What is it that you set as a leader in the organization? Many of us are leaders in organizations. Do you say one thing and do the other? What you do is what others are going to do, because what you do will be louder than what you're saying. Okay? There's something I really like to do at this point. I ask people to get their right hand. If you get your hand, and put your right hand, okay? Put your right hand on your cheek. Do this with me. Just put your right hand on your cheek, your right hand on your cheek, all right? On your cheek, your right hand on your cheek. So some of you possibly have put it on the chin because that's what I'm doing, and yet it should be put on the cheek. Okay, that's what we're talking about, because what I'm doing for some of you was so loud, putting it on the chin instead of putting it on the cheek. So if the environment is saying do this but they're doing the other, if the leader is saying do one thing and they're doing the other, people are going to do what you are doing, not what you are saying. What you do is so loud that they can't hear what you're saying. If the board says one thing and does another, the environment is not good. I know of some countries where they have very, very good laws and very, very good policies over financial management, but they do the opposite. The enabling environment is not good. Okay? Very, very important. The other is the kind of staff. Do you have the right staff in your finance office? Are they qualified? Do they know what they're doing? Do they know how to record these transactions? Can they guide the budgeting process? Can they produce good reports? Okay. Do they know what they're doing with the quack accountants? How about the rest of the staff? Do they know their financial management roles? Or should they go through a clip like this to begin understanding some of their roles? Okay. What kind of staff do we have? What are their value systems? What are their attitudes towards financial management? Staff, very important component. It's a soft component, but very important. Culture and values. The culture of the organization and the value set of the organization. Very, very important for good financial management. You may have all the policies. You may have all the written things, all the good documents. But if the people who are implementing the systems have a wrong value set, you'll ask for a receipt, they'll cook the receipt, they'll give it to you. They'll be finding ways around, colluding around. You have the policies, but they find ways of colluding and being able to beat the system. If you have the wrong people, the wrong culture set in the organization, that's what happens. If the culture in your organization is when I am given $300, $500 to spend, I must spend it all. I don't spend what I need and account back. No, I just have to spend it all. That's the culture in the organization. That's a wrong culture. You've got to spend what you are meant to spend. If you were given the $500 to buy fuel and you needed only $300, pay fuel for $300. Bring back the $200. But if the culture is such that bring back nothing, just spend it all, will you have more money at the end of the month, at the end of the year? Maybe not. Okay. Finally, I'll talk about ICT, the tools that you're using to record your transactions. So you're looking at what software do you use. Some will say we use QuickBooks for the smaller entities. Some will say use SAP, we use SAN system, the Vision, many types of systems. But do you have the right ICT? Do you have the right technology to help you to record your transactions well, to report well, to be accountable, and to be able to be relied upon by the different stakeholders? Okay, so if you like, this is the summary of what we've talked about: what financial management is, why it is important, who is responsible, and how to achieve it. And I used the face of the effective financial management to help us to remember that. I hope you found this very useful for yourself and that you will be able to apply some of these principles to your financial management. Thank you very much. Once again, my name is Alfred. Agaba, I'm the team leader at Acclaim Africa Limited, and I hope you've enjoyed this. Thank you very much. Goodbye.